Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Brad Smith. Let's get to the three things that you need to know today. First up, U.S. stock futures, they are trading in the green today, this morning, as the latest read on the U.S. economy did little to move the markets. The second revision to first quarter GDP coming in well below estimates at negative 0.5%. The unstoppable rally in the stock continues. Plus, President Trump eyeing a changing of the guard at the Fed. Dollar falling to a three-year low and bond yields dropping to a report from the Journal saying that Trump may speed up his announcement for a successor to Fed Chair Powell. The potential nominees, they include Fed Governor Kevin Warsh, National Economic Council Director Kevin Hassett, and Treasury Secretary Scott Bessent, among others. The reporting comes as the president calls on the Fed to cut rates, with Powell set to remain in his post for another 11 months. And Nvidia shares hitting a record high, giving the chip maker the title of the world's most valuable company. The record is only the latest milestone for the company, which has risen 63% off of an April low, a rally that has added nearly $1.5 trillion to its market capitalization. Nvidia's growth has been driven by robust earnings and strong demand for its AI chips. Let's get a check-in on U.S. stock futures here, taking a look at the major averages this morning. We've got the Dow, the S&P 500, and the NASDAQ all higher and fractionally as it may be. The Dow is up by about 0.25%, the S&P 500, that's up by about 0.25%, and the NASDAQ futures up by about 0.4%. We'll round that off too. Let's turn now to our top stories of the day. First up, we'll break down the latest read on GDP and take a look at potential changes to the Fed. Plus, we'll hone in on the tech trade as Nvidia hits a record. And we dig into earnings results from Walgreens. Joining me now, we've got markets reporter Josh Schaefer, senior reporter Ali Canal live from the NASDAQ, and senior healthcare reporter Anjali Kamlani. Josh, let's start with you. You're taking a closer look at the economic data out this morning. What do we know there? What have we seen?
Yeah, Brad, so you mentioned that first quarter GDP number. Again, that would be economic growth that ended back in March, right? So pretty backward looking at this point. That was revised lower from 0.2% decline to a 0.5% decline for that first quarter GDP. But I was also keeping a close eye on continuing claims this morning. So this is continuing people that file week after week for unemployment benefits. That ticked up to its highest level since November of 2021. So an interesting data point to keep watching there as more Americans continue to sort of struggle to find new jobs once they are out of a job.
And so just a second more on this, especially considering we're hearing more about the Fed and how they're evaluating a lot of the economic data that's come out, with some of the questioning that we've heard from Fed Chair Powell, really looking at the quality of the data, but also how that's interpreted and who interprets it might be changing, at least at the chair position. What are we hearing about what President Trump is thinking through of who the next Fed chair might be?
Yeah, Brad, so it sounds like from that report from the Wall Street Journal that President Trump would be interested in perhaps nominating a new Fed chair earlier than Chair Powell's nomination or time as the Fed chair being over. So that would be sort of an interesting move for markets, but I think your move in futures right now is sort of telling you that maybe the market could look past that, right? We're showing the dollar, that has moved lower, but overall stocks at this point, not really impacted by that. And I would go back to the discussion from really 2 months ago now when there was discussion of perhaps Trump removing Powell. Strategists sort of argue that the key in that whole discussion is just investors want security in what is happening with the central bank, and knowing the central bank would be there to cut interest rates if something was going on in the economy, raise interest rates if they need to. They just want to know there's a stability factor there. And at least for this morning, these reports don't seem to really be testing that overall thesis for investors.
Okay, while we have you here, Ali, of course, one of the other major stories that we're tracking this morning is just the move that we're seeing in Nvidia, a fresh record high that we had just seen yesterday here. What more could continue to thrust this stock to the upside?
Yeah, and Nvidia shares, they are up around 1% today in pre-market trading, set to open at a record. We closed at a record, just extending a lot of those gains there. And for a company like Nvidia, there just seems to be a lot of momentum. I've been speaking with a lot of strategists who tell me that they believe Nvidia is undervalued at this point, that there's a lot more room to run in this tech trade. It was interesting. They talked about different positioning that investors were taking at the beginning of the year, and really after those April lows that we saw following Trump's Liberation Day, where investors took some money and put it into more defensive sectors of the economy. And now we're seeing that maybe it's better to be overweight tech. There's a lot of cash on the sidelines. So I feel like for a company like Nvidia and really the tech trade at large, there just seems to be more room to run.
And so as we're tracking the tech trade as well, we do know that Micron is also in focus within that. So how are we hearing some of the analysts out there really kind of weigh the thesis around Nvidia versus some of the other semiconductor names right now?
Yeah, Micron just reported a really solid earnings, a beat on both the top and bottom lines. We saw Q3 revenue jump. We saw a really solid forecast. And the key growth driver here for Micron is high bandwidth memory, or HBM. This is used to power AI data centers. And HBM sales rose nearly 50% quarter over quarter. JP Morgan expects a run rate of $8 billion soon. We saw the stock pop in after hours. We then saw a bit of trimming when it comes to some of those gains as executives offered more cautious commentary around those HBMs. Still, we're seeing shares up modestly this morning, and that's lifting all of the chip makers, really, not just Nvidia, but also names like Marvell Technology, AMD, TSM. Those are all up, moving to the upside as well this morning. So it just speaks to the wave of demand that we're seeing for the AI trade and really these chip makers at large.
And Anjali, don't want to keep you waiting any longer here. Walgreens Boots Alliance, we know, of course, this is a company that is already in agreement with Sycamore Partners and is set to go private. But here, ultimately, taking a look at shares pre-market, they're higher by about 0.5% after earnings. What is coming through? What's the investor read through there?
Yeah, so, I mean, of course, as you mentioned, they are going to be private. This could be the last earnings we actually see from them because the sale is set to close between the third and fourth quarters of the year, and this is the third quarter for Walgreens. So earnings results, as we've seen the market sort of positively react, they did beat street estimates. So at least in that sense, we are getting some readout from what the street expects, still putting some, expectations on Walgreens. But analysts have largely stopped covering this stock as a result of it going private. So we actually haven't heard much. There's also no investor call today. And Walgreens did pull its 2025 guidance as a result of the stock going private. And so we haven't had much in terms of, context around what's going on. We do know that CEO Tim Wentworth did say in a statement today that he is seeing a little bit of softness still in front of store sales. And that's something that we've been tracking. So he did say today, quote, third quarter results reflect continued improvement in our U.S. healthcare segment and benefits from our cost savings initiatives, while we continue to see weakness in our U.S. front-end sales. That's an area that we, as I mentioned, have been focusing on. Continuing the quote, we remain focused on our turnaround plan, which will require time, disciplined focus, and a balanced approach to manage future cash needs with investments necessary to navigate an evolving pharmacy and retail environment. And this is just some of a callback to some of the issues we know have been sort of pressuring the company and the stock, the retail arena for them not so strong, and it continues to look that way. Meanwhile, still managing to beat, I did see also VillageMD being a part of the bump that they did see to that $39 billion this quarter. And that's been a little bit of a shift from before when we have seen them being concerned about the cost of VillageMD, that's their clinical services, versus the revenue coming in. So it seems like there has been a little bit of turnaround there, and the company is focused on turning around this stock. So at least before it goes private. So that's where things stand right now for Walgreens.
Yeah, when we got more of the details around what this ultimate agreement would look like here, they're saying Walgreens would be better positioned to improve pharmacy, retail, and health services and to enhance the customer, patient, and team member experience. But continuing to invest in some of those core pharmacy operations, that's what's going to be a major question mark for how that looks for the consumer experience as well. On the other side, we'll be watching this very closely. Josh, Ali, Anjali, thanks so much for kicking off Morning Brief with us. And we'll have full coverage on the future of the Fed when opening bid begins at 9:30 a.m. Don't miss that. Well, switching gears here, we got a fresh read on the labor market out this morning with jobless claims. Josh Schaefer, how were the numbers for last week?
Hey, Brad. So jobless claims ticked down last week, right, to about 235,000. But what we're going to take a look at here, that was weekly jobless claims. Those come out every week. Those are new filings, right? What we're taking a closer look at is continuing unemployment claims. So this is actually from the week prior. This would be the week ending June 14th. And you can see the big tick up at the end of that 2025 mark, right? We're starting to move higher here. And so what this is telling us about the economy right now, with nearly 2 million people filing for weekly continuing unemployment claims, is it is currently harder it's taking longer for unemployed workers to find new jobs. So this is part of that low hire, low fire labor market we've been talking about for a while, but it's starting to build up a little bit to a point where economists are starting to get a little bit worried about if this number were to keep moving higher, if that initial weekly number keeps moving higher, so more people are getting laid off, and you put more people in this basket that continue to not be able to find jobs because the hiring rate is near a decade low, that would be one more sign of the slowing that we're seeing in the labor market. You spin that forward to what that means for the Fed, Brad. This is one of the charts when people are talking about the Fed should maybe be cutting sooner rather than later. Continuing unemployment claims is one thing that economists are using to start to argue that point.
All right, continuing to watch the data here. Josh, appreciate the breakdown this morning. Now time for some of today's trending tickers. We are watching Palantir, JetBlue, and Nike. First up, investors betting against Palantir are taking big losses as the stock continues to climb higher. Palantir is the S&P 500's top performer so far this year, and some short sellers are now giving up as strong interest from retail traders and geopolitical tensions keep shares on an upward trajectory. Analysts expect the data analysis software producer to continue its sales growth through artificial intelligence applications and expected partnerships with the Trump administration. Next, JetBlue's second largest investor, Vladimir Galkin, is threatening to sell 10% in his stake in the company here. And Galkin, who holds over $200 million in JetBlue stock, which accounts for roughly 10% of the total outstanding shares, says that if the flight carrier's cost-cutting plans fail to improve performance, he will dump his shares. JetBlue is facing major challenges, and in June, a memo released saying the company would reduce flights and focus on profitable routes, as well as reassess its leadership team here. Shares of JetBlue are moving higher right now by about 0.25%. And finally, Nike is set to announce its fourth quarter earnings later today after markets close. And investor sentiment is not promising right now. The sportswear manufacturer facing challenges over tariff uncertainties and operational issues, with the stock now trading at its lowest level since 2018. Analysts are expecting a nearly 88% decline in the company's adjusted EPS and a more than 10% drop in revenue from the year prior. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Coming up on Morning Brief, we count you down to the opening bell on Wall Street with stocks set to open in the green. We've got more ahead on Morning Brief. Nvidia shares continuing to move higher after reaching a record high. But my next guest says there are still a few reasons to be skeptical of the post-Liberation Day rally. Joining me now in studio, we've got Gene Goldman, Cetera Financial Group CIO. Gene, great to have you back here with us. So you call this a White Lotus market. Just break that down. We got a lot of fans that may also watch Yahoo Finance and White Lotus, so the Venn diagram is solid, but just break down what you mean by that.
Sure. First of all, I think we classically are in a White Lotus financial market. Think about the White Lotus show. We both have watched it. Sure. So the White Lotus resorts, they're peaceful at the surface, but there's with luxury, with nice cocktails and sunsets, beautiful at the surface. But there's all this potential chaos brewing. Look at our financial markets right now. We've had a V-shaped recovery. We've bounced back pretty fast, pretty quickly, near all-time highs. But there's a little uncertainty and chaos revolving. You have high market concentration. You have a slowdown in Mag 7 earnings and revenues. You have high valuations. You also have the fact that there's uncertainty with the Fed. We continue to believe that Jay Powell is acting more and more like Armand. He's confused, hesitant, and now that we need him with the economy starting to slow down, especially today's continuing claims, we need him to be there, but he's nowhere to be found.
Do you think that, and this is something that I was going to say for later on in the chat, but we have President Trump saying that he's mulling identifying or at least making known who his replacement pick for Fed Chair Jay Powell would be once the term expires. What is the likelihood that that person would be less like Armand, if you will, in this analogous scenario?
Yeah, I know we're both trying to be optimistic, unlike the show, which is very dark.
Right.
We're both trying to be optimistic.
Right.
The problem is that I think the markets, the market reaction has been good. stocks are up, bond yields are down, but I think it's a very questionable market reaction because let's think about it. He nominates Jay Powell, a replacement for Jay Powell. That's one person. Jay Powell, as the Fed chair, basically can steer policy, but he doesn't set interest rates. So now you have Jay Powell.
He's just one person.
He's just one person.
That's an important
You have
factor.
Jay Powell, you have Kugler leaving in January, and you also have Bowman, and you also have Bowman and Waller that Trump appointed in his first term. That's 4. There's other 8 people who could vote other ways.
Yeah.
So despite the fact that, maybe he replaces the Fed chair with a more dovish person, that's still one person.
Yeah, our own Jennifer Schonberger reporting as well here this morning that President Trump is not considering Waller. We will continue to watch, of course, who in this mix of names really gets kind of elevated or who sees their stock decline in that conversation as well. You look like you had a comment.
Yeah, but that's the surprise about Waller because remember, last week's Fed meeting, it was consensus, no rate cut. But Waller comes out the next day and says, hey, we should cut rates.
Yeah.
What's going on? I thought he was trying to grapple for the job, but that's a change.
Coming back to the markets here, why does this new all-time high for Nvidia matter more than previous ones, given the context of how far and how quickly we've come back from the self-induced sell-off, if you will, because of the tariff policy and Liberation Day that then sent stocks tumbling to a near bear market, and then the recovery that needed to ensue once there was a pause initiated on several fronts?
Yeah, I think this recovery was very interesting because you had a surge in high beta stocks, penny stocks, IPOs, and again, more of some of the aggressive names. We haven't seen market breadth widen enough as we should see in a market rally. That worries us. But with all this said, we do think we're in a gyrating market, lots of volatility. But again, I'll be optimistic. Unlike the show, I think by year end, we'll be higher than we are right now. You have, let's say we have tariff revenues being recycled back into the economy, maybe $200 billion, maybe $2.5 trillion over the next 10 years, according to the CBO. You also have the fact that the tariff negotiations will see fewer tariff trade restrictions in theory, and the fact there's $26 trillion of cash on the sidelines waiting to get back in via money market or savings accounts.
It's interesting, especially if tariffs do stay on the table, because we've heard from a lot of institutions what their anticipations are for the longer term average of tariffs, which suggests that they are going to stay on the table, just in perhaps a more calculated capacity.
Yes.
If that is the case, within these negotiations, there's also something very critical in intellectual property that could impact the very trade that has been the shining light for the markets, and that's been the AI trade here. What are your anticipations?
The markets see this already. So look at the Mag 7. Mag 7 earnings last year were up about 36%. This year, they're up about 6%. Mag 7 revenues up 14% last year, up 3% this year. So the markets are already pricing this in. But if you go back to sort of the AI trade, this ties back to our favorite sectors. We like technology because we like the long-term secular themes, AI, cybersecurity, infrastructure. We love industrials. NATO increasing defense spending from 2% to 5%. That's great for industrials and defense stocks. And we love financials. Second half of the year, deregulation, better environment for financials. All that together, we are pretty optimistic about those 3 sectors.
And so just to put a bow on this, is Nvidia hitting all-time highs prior to the kickoff of Q2 earnings season net good or net bad for breadth in the market?
I feel like it's more of buy the rumor, sell the news. So I'm a little bit worried about this run up in advance. Because think of this, when you have the AI continuum, first stage is semiconductor companies. Second stage is applications and sort of the data centers. And the third stages are more on the consumer application in terms of AI. I think we're starting to move away from the first section, the first part of the continuum. Now applications and other parts should do better as opposed to, say, semiconductors.
Does that mean software?
Software, applications, tools. Just think about how AI can be used today in terms of consumer goods, in terms of every day our work, our analysis, what we're doing today. More opportunities.
Gene, great to have you back here in studio with us. Thanks so much for stopping by while you're in New York.
Thank you.
We're coming up on Yahoo Finance, our opening bid show. Our executive editor will bring you the news that you need to know to power your portfolio. Brian, what have you got coming up on the show?
Yeah, I got a lot of portfolio powering news here, Brad. So let me tick off a couple things here first. Heard you talking in the morning about that potential changes to the Fed chair seat. We're going to dig into who, in fact, may get that seat from Jerome Powell. But more importantly, what would it mean to markets if we get a Christopher Waller in that seat, or even dare I say it, Kevin Hassett. Next up, too, Goldman Sachs. Good note out of them. Their team this morning caught my attention, calling for a stagflationary shock. Anytime we put a headline like that on a research report, you got my click and you got my analysis. Next up, tech bubble. Really enjoyed your chat there on Nvidia. Very important points being made. We'll dig into further the Nvidia potential bubble we're seeing in that stock and more broadly out in tech. And last but not least, in our power player segment, we're going to welcome on Stephen Myron. Of course, he's the chair of the Council of Economic Advisors. New report out of them on the One Big Beautiful Bill, what it may mean to the economy, but more importantly, what it may mean to everybody's portfolio, Brad.
All right, that does it for Morning Brief, everyone. We've got opening bid coming up next, plus the opening bell on Wall Street. Stick around. You're watching Yahoo Finance.